What is going on, investors? Back again, another stock analysis. I get a lot of questions here on the channel about AT&T. This stock is at a key level around that $29-30 per share, and lots of people asking me, is this stock a buy? So we're going to run through some of the news that is happening. We'll jump briefly into the financials based on this news that they possibly might be selling DirecTV. A little bit more news about a little bit of strategy shift at Warner Media. Again, we'll jump into the financials as well. We'll do a little bit of valuation because AT&T can be comparable to Verizon, Disney to a certain extent, Comcast also to a certain extent, and T-Mobile as well. We'll take a look at where AT&T falls in evaluation against its peers. We'll also take a look at AT&T's valuation against itself, which I think is even a better test. And then finally, we'll jump into the stock chart, see if this is a level where we could potentially buy AT&T. Before I get too deep into this video, I do own about 100 shares of AT&T, but I'm not married to these shares, certainly not one of my larger holdings, and I hold it for a variety of reasons. Maybe we'll get into that as we get into the video. But this stock is a $200 billion to $10 billion market cap. I think the most important thing that investors are paying attention to right now is you've got a 7%, yes, with a 7% yield on this stock with savings accounts, bonds, U.S. Treasuries paying virtually nothing. This is a very, very well-paying dividend stock, and so it is widely held and is a stock that a lot of people care about, including myself. Now, some interesting stuff is going on with this stock. Part of some activism that is going on with shareholders of AT&T is basically, I don't want to say obligated, but according to one of the agreements that they have with one of their activist shareholders, is they need to explore the sale of pretty much every business unit. And the biggest rumor right now floating around is this DirecTV. There's other units that they might be selling, but none of them add up to what DirecTV could potentially. Now, I believe AT&T paid roughly about $49 billion for this company back in 2015. Obviously, they paid a little bit of interest on some debt that they had to raise to buy the company, but they've also generated some revenue and probably got some cross-selling opportunities. So it's hard to know exactly what they're in DirecTV for, but the most pertinent information is they are potentially might get about $20 billion for DirecTV. Obviously, that's just an estimate. Could be higher, could be lower. We'll see. But I think the $20 billion mark is probably relatively accurate, given the struggles that the corded TV like DirecTV offers versus like a Netflix and a Hulu and other types of offerings that are far more popular these days. So $20 billion, where does that leave AT&T? First of all, they borrow a lot of money at very low interest rates. Take a look at AT&T, what they're borrowing money for. If any of you watching want to lend me money at any of these percentage, although we've got some 7% here, some 5.2%, some of these aren't as attractive, but they have borrowed a ton of money at a blended rate here at I would guess this is a pretty low multiple on the debt. So it's not that expensive for AT&T to be servicing debt. Now, speaking of the balance sheet, I think what you want to understand is if AT&T were to get $20 billion for an asset, I've seen estimates that it would cut about 10% off their revenues and maybe a little bit of cash flow related to DirecTV, but it's not a big part of their business. And I think that's maybe why they're looking to sell it. Now, AT&T at the last reported earnings recall had on June 30th, had about $17 billion in cash. They had about 19 in receivables. I guess you could add those together and we can call that about $37 billion worth of cash. That's actually a pretty healthy number considering debt maturing within 1 year was at $15.5 billion. And I think they might even refinance some of this since this last earnings report. Now, that's not the full story. The stock would be tremendously higher if all they had was $15 billion debt. Actually, add a couple zeros to that. They have $153 billion. Yes, $153 billion worth of debt on this company's balance sheet. Again, at low rates, but that is a hefty number. So even if they were to sell DirecTV for $20 billion, it would just barely cover most of their debt that they have due within 1 year, and maybe a little bit on the long-term debt. Now, I'm going to float an idea that probably isn't going to happen, but what I think would be a more interesting strategy, again, AT&T is borrowing money at sub 3%, but every share AT&T is paying 7%. So what would be a better use of $20 billion than paying down debt? Would be actually buying back shares of AT&T. They would save 7% in perpetuity if they're paying this dividend in perpetuity versus borrowing money at a term at a much lower rate. So I actually think, I don't expect this to happen, but if they sell DirecTV and they did a $20 billion buyback, I actually think that would be a better thing for the company financially. Whether or not that happens, I don't know, but you could potentially maybe see a combination where they use a little bit of the DirecTV to pay off some debt, but then also maybe execute a buyback. Whether or not the terms of these borrowings allow them to do that, I don't know. I just think that would be an interesting strategy, something that would definitely catapult the stock forward. Now, the other thing you have to factor in is this DirecTV news is pretty widely known, and the stock really didn't move a whole lot. I think it popped up just a little bit on this news. See here, it was up 1.2% on after hours on August 28th, but the stock's really gone back down and kind of traded sideways. So I don't want to say that the market's priced this news in or not, but I wouldn't expect a big pop on AT&T shares if this deal executes, unless they do something wacky like execute a $20 billion buyback or do something like that. That's a little bit against the grain of what people are expecting, which is simply just pay down this debt a little bit, which could potentially get them under, I guess, that $130-ish billion worth of debt. So they'd still have plenty of debt, but from a cash flow perspective, from an operating perspective, this company is very well positioned to manage this debt, and again, it is at a low rate. I want to throw one more piece of news, is they're restructuring this Warner Media, which I think is the key to the valuation of AT&T. No one's going to pay them a hefty premium, obviously for DirecTV, obviously for their cell phone business, but this Warner Media, which includes CNN and TNT and lots of networks out there, this is an interesting asset, and if they can grow this along with the HBO asset that they have, you could see a boost in this stock's valuation. They just got a new guy who was involved in the company. They basically promoted him inside Warner Media to be kind of the lead strategy guy. And, look, they weren't doing very well with this group. And so maybe some new fresh leadership in there could be a good thing. Now, from a valuation perspective, we see here, we got PE ratio right here. This is GAAP. This is our forward earnings. You're paying about 16 times for AT&T. You're paying about 13 times for Verizon. Disney has slipped to a loss, so they don't have a PE right now. You're paying about 22 times for, this is Comcast, I believe. And then T-Mobile, you're actually paying quite a bit. You're paying 69 times forward, but on the revenue growth basis, you see T-Mobile's growing at 16%, whereas Verizon and AT&T are actually declining. So if AT&T and Verizon were able to turn their revenue growth positive, I think you'd see a better multiple, at least on this PE, not necessarily close to T-Mobile, but they could grow that tremendously. Now, from a price to sales basis, you see that the market really doesn't reward anybody outside Netflix, which I don't really consider a comparison here. But, from a price to sales basis, trailing 12 months, AT&T's only getting 1.2, Verizon's 1.9, and even T-Mobile's around 2. So I think that's your upside on a price to sales basis, which would obviously be attributable to the stock, but I wouldn't expect these rapid moves inside of there. Now, let's take a look at instead of comparing AT&T to other companies, it's hard because they own the Warner Media Group. Verizon owns something like Yahoo, T-Mobile and Sprint are kind of more a pure play kind of cell phone service. Well, AT&T, I just want to compare it to itself. What have investors been willing to pay for AT&T over the years? So here's price to sales trailing 12 months, we actually see it's at a low when AT&T has traded near this 1.2 and even a little bit lower than that. The stock has tended to want to rally after that. We've seen it back here. It rallied. It sucked back down here to 1.2 earnings, jumped back up, sucked back down. It'll be interesting to see if they can get this going back up in the other direction. Now, from a price to earnings ratio, paints a little bit different story. It actually paints them right where they're supposed to be. So if they can grow sales and not necessarily earnings, I actually think AT&T stock will go up faster. And so I think earnings may be less important to this company because we can see here they're trading at a price to earnings ratio where it's comfortably traded in the past. And in fact, when it's dipped down, it's wanted to come back up to this, call it 13 to 15 to maybe up to $20 trailing 12 months price to earnings. So from an earnings basis, I don't think AT&T's going to get much credit than they already get. But from a sales perspective, this is a company where if they can start getting positive momentum on their sales, this is a company that could see some upward momentum. I think based on that, I think investors are more going to reward them based on sales versus necessarily earnings. So now, the question I get all the time, is AT&T a buy? It is consistently traded. I mean, we can go way back on this chart. This stock tends to like to bottom out in this $29 range. We see constantly this stock has hit this $29 range right here consistently over years. So it bounced here, bounced lower here, bounced here, kind of traded here, bounced lower, bounced here, and we've been actually bouncing on this for the since the coronavirus low back in March. Now, I think if you want to be greedy, this stock could retest the lows. Honestly, it could come back down to 27, somewhere in between the $27 and $29 range. I find that an even better range because I think the upside in this stock is kind of where I've drawn this trend line here, right around that $31, $32 level. Now, could it break above that? Absolutely. It possibly could, but I don't necessarily think that's something that's going to happen very quickly. Do I like AT&T at this $29 level? Absolutely. If you want to build up a position, I don't mind it at all. If you want to be ultra safe and set like a stop loss, I think you could be down in here in this $20, $28 range because I think the stock could potentially, if we have like a market sell-off, something like that, AT&T could get caught up in that and kind of trade down under this lower end support right in this $28 range. But if it goes lower than 28, I think it's going to retest these lows it made back in here in March and then also all the way back here last year, right around December. I think we could come all the way down into the $26 range. So if you want to be safe with your AT&T shares, that's where you want to set the stop loss. I also think you should have a stop loss on AT&T shares because so many people invest in this stock because of this dividend. If for whatever reason AT&T cuts the dividend, suspends the dividend, this stock would fall off a cliff. I don't know how much good a stop loss would do you because this stock would gap down and go lower if they cut this dividend by any amount. So that is something that you want to keep in mind. I don't want it to make it seem like AT&T is just this sure thing at $29 and it's never going to cut its dividend. It's never going to go lower than 29. It's never going to go lower than 26. There's going to be people in the comments that are going to say stuff like that. Look, they could cut this dividend, which is a possibility, and this stock would fall off a cliff. So that's just something that you want to keep in mind. Do I think that's probable? No, but it is a probability, so it's something that you want to factor in. So I would monitor this stock. This is a stock where if we have a broad market sell-off, I think you could squeeze out a little better price of it. If you just want some yield in your portfolio, you have some cash sitting on the sidelines. Instead of earning no money, you want to earn 7%. I don't mind AT&T. I think you can look on here at the levels where maybe you can set a stop loss underneath that just so you don't blow that whole amount of money since you're investing it kind of in a safety investment anyway. So that was AT&T. I think they've got some positive momentum. I think they can unload some business units. I don't think it's necessarily going to shoot the stock higher, but it certainly could clean up the balance sheet as well. And you have the possibility, I suppose, that they could use this money in a unique way. Instead of paying down debt that is of an extraordinary low interest rate, maybe they can do a buyback, which I think would be much more beneficial to shareholders. That would be really interesting if they decided to do that. I think you would see the shares rocket up, not necessarily rocket up, but I think you could see a 5-10% move in a 90-day period with AT&T if they announce some kind of buyback to that nature. So that was AT&T for you. I think it's a decent stock. I think you're getting a great yield. I think there is some risk in this one, but it's probably safer than a lot of stocks that are out there. So good luck with AT&T. We'll be back again soon. Good luck with your investments.